Thank you so much, Chris. And I'm really happy to be here today, and I'm grateful to the IF for the opportunity to be moderating this panel. I was surprised by the results of the poll that we just had, because everybody's talking about data, and it is true that during the sessions that we've had so far, most of the time we're talking about data localization, data restrictions, but data policy is a very complex issue because data is arguably a multifaceted piece of analysis. So as to say, I wouldn't actually call it an asset, I would actually call it just information. You can address data from a more legal perspective related to the rights that citizens and countries have, but you can think of data because of its economic power. You've probably heard many times that people think that data is the new oil. That's probably not the best comparison because in economic terms the dynamics are completely different. But anyway, there is a sense that data has a lot of value. And probably the future of the industry is very much related to this. So when we look at data, and that's something that was reflected by the poll before, we see that there are two mega trends that we identify. One of them is about control, it's about data privacy, it's about geolocation restrictions, and the other mega trend is about openness, about sharing. And the question is, okay, how can we deal with those two apparently conflicting interests? And that's going to be the basic discussion that we'll have today with our panelists. So without further ado, I'd like to start the questions to our panelists today. And first, on this megatrend and control, I'd like to ask John. We're seeing this strong tendency towards more control over the data and more restrictions on privacy, and we see that people are really concerned in the audience about this. How is this trend actually affecting a large financial institution like Maybank?
Thank you, Alvaro, and good morning, everyone. I think the interesting thing, data privacy and protection is not a new thing to financial institutions. I think most of us will agree that we've always been a regulated industry. Data and data confidentiality have always been a key component of that regulation. And today, we still have restriction about sharing data across different jurisdictions. So take Maybank, for example, we operate in ASEAN. We have restriction in terms of sharing our data from Indonesia, from Cambodia, and some jurisdictions are a bit more open, like Singapore, to some extent. But so what's new today, and why are we talking about this? I think basically I see three key things that should be talked about. And that is, firstly, how this data is being used. I think in the past it was just protecting your transactional data, etc. But today, obviously, we use those data for different things. The second new thing is, of course, new form of data. We always talk here about people, why there's so much interest in technology company in financial institution. Because obviously, money moves things. And money basically creates transactions. And why fintechs are interested in this in financial transaction is because that's where they understand consumers and how consumers are behaving and spending, etc. So obviously we have new forms of data created from some of this second primary data. The third thing I think that's new, of course, is this increasing cross-border transaction that's happening. Today, in financial institutions, we're still restricted in terms of sharing of data, as I mentioned. But then you start looking at the technology companies, particularly if I can use an example in ASEAN. Grab is the primary ASEAN ride-sharing service provider. It displaced Uber because Uber could not compete with Grab in the ASEAN space. They operate across ASEAN. They push product across ASEAN. They have data about people, obviously, ride-sharing, food spending across ASEAN. And they're not restricted by those restrictions. Well, in a financial institution, we are. We have the same kind of information where they are spending, etc., but obviously we can't share that as openly as some of these technology companies. So the question is also, if you ask consumer today, who do they trust more? I would dare say that, and I've seen surveys that say that they trust a technology company using their data more responsibility than financial institution would. And that's an interesting sort of outcome if you think about that. So I think those are the issues that I think when we talk about control, are we having the same level playing field? Are we regulating the right set of group of people, because obviously financial institutions is just one set of players. There are many other areas that we need to also consider. So I think when we talk about control, we need to talk about it on a wider scale level. Thank you.
Absolutely. And you mentioned trust, which actually was one of the conclusions that we had from the previous panel, where almost all the panelists mentioned trust is one of the great assets that financial institutions have in this data-driven world. Actually, John, how do you deal with this regulation on control over data when you're operating in different countries? And this is evolving differently in different countries. How is this working in ASEAN, and how is Maybank dealing with it?
So I think obviously we have a lot of dialogue with the regulators because, as I say, today we are a regulated entity as opposed to some other players. And hence, there's a lot of dialogue, there's a lot of convincing, there's a lot of education that needs to be done to look at why this data sharing is important. And most of the time it's actually around better control. I was interested to hear someone mention yesterday when we talk about cloud computing. Today is still a lot of restriction around cloud computing in many countries. The question is cloud safer or our infrastructure safer? And that's also an interesting debate in itself. Yeah.
Excellent. Now, I'd like to ask Lara a question, because we're talking about Asia right now, but one of the regions in the world that has taken the lead on data protection is the European Union. And we've got GDPR, and I think that by now probably everybody knows about GDPR. So in the case of Credit Suisse, how have you dealt with GDPR? How have you dealt with your European operations? And has this changed the way that you address risk related to data?
Well, first of all, I think it's very important that you use the word protection. Some people talk about privacy, and in fact, the word privacy is only mentioned once in GDPR in a footnote. So it is about protection. But I think the concept of privacy and protection are important. Privacy is about, in our view, what those allowed to have data do with it, and protection is about ensuring that data does not move into the hands of people that are not allowed to do it. I think the challenge on GDPR, frankly, is that we now have laws and regulations on what is largely an untested space in the financial services industry, and in many ways conflicts with existing financial rules and regulations. I think the second challenge for the financial services industry is that we are increasingly dealing with an entire new body of regulators in the data protection offices. These are not people that we have dealt with before. So unlike, I think, some of the traditional financial regulation that goes through significant comment periods, and we generally have vehicles and ways to engage and provide some of our input, this is really largely untested and brand new law. We don't know what the reactions of these new offices will be. So as a consequence, we've had to be, I would say, quite binary about how we think about implementing GDPR. So first of all, for Credit Suisse, for example, we've had to obviously go through and make sure we understand how we use client information. That's been, I think, very positive. But for example, the second more challenging is, we do not buy marketing information on our clients, because that seems to be a space where the rules are pretty specific, although that's been part of how companies have operated for years and years and years. So I would use that as an example of somewhat of a potential challenge as you try and implement it. But the third area is we are still in a position of conflict, hopefully awaiting the regulators to come to some conclusion, in particular around how does GDPR align with areas around AML, for example. What does the right to be forgotten really mean? And to what degree do we have the right to actually not forget somebody? Because most people understand that maintaining 10 years of information around our clients is obviously a mandatory requirement in many cases based on financial regulations. So I would say it's still very early days. There's a lot more work to do, but the challenge is there's very little opportunity to engage with the community that's responsible for enforcing this regulation as a financial industry to provide and get clarity and feedback.
Actually, GDPR is a great challenge on both sides. I mean, it is a challenge for regulators because enforcement is going to be extremely complex because it's such a demanding piece of regulation and it's cross-cutting. So that this is on their side. But as financial institutions, again, compliance is extremely complex. It requires not just updating the policy and the terms and conditions. It's also about governance. So it is very demanding. Actually, one of the comments that we usually hear in Europe is how this piece of regulation is providing a lot of rights to individuals, but then actually making use of those rights is extremely complex. So how do you think that financial institutions, government could help actually individuals understand the full extent of GDPR, and how can they make good use of it?
Yeah, I mean, I think this is probably one of the most important questions. I mean, first of all, I think the EU has done some polling, and to date, 8% of people globally even understand what the issue around data is and how their data is used. I think there was also a recent poll that just came out in May, again done in the EU, that said that of those that had basically been notified and provided consent, only 58% really don't understand, what they're consenting to. So I think we've come out with laws that presuppose how to solve this problem on behalf of the consumer, and the consumer, I think, is left as the most confused individual in the conversation. The second thing I would just say is, I think we have to be very careful as regulated institutions, as regulators, and as governments in presupposing how consumers want their data to be used. I think this is the second question. When a consumer clicks on a button and says, I'm happy to have my data shared, do they understand that that is global, within a region? What do they presume? And then, so if I assume my data is being used globally, what is the right of a regulator and a political structure to actually limit my data within certain geographies? So I think, from the individual's perspective, there's still a lot to be worked out in terms of the rights of the individual and whether or not different bodies can usurp those rights. What can we do? I think data literacy is critical. We know financial literacy has been a struggle. Now we will have a new level of education that we must provide to the consumers. But I think the positive thing is this is so critical to competitiveness for firms, whether it's banks, whether it's technology companies. If consumers don't trust you, they will not do business with you. So I think for once, perhaps the regulatory world should think about whether or not it will be in organizations' own best interest to proactively educate consumers on how they use their data. That's certainly something that we talk quite a bit about inside Credit Suisse, but I think it is going to be a competitive prerogative and requirement as we go forward, regardless of the industries that you're in. That to me is the number one focus.
Absolutely. And as a financial institution based in Europe, in our case, we've been asked several times how GDPR affects our global operations, because if you have your headquarters in a country that's subject to GDPR, this raises the bar, and you start thinking how you will apply those principles and that regulation at the global level. And this is something that affects many businesses. And actually, I now wanted to turn to Scott and ask you precisely, when you have this differences in how different jurisdictions are approaching data privacy, data control, how do you think this might influence business decisions? How do you think this might influence businesses and eventually financial institutions deciding to locate in one jurisdiction or another?
Thanks. I think there's a difference in the question here between how it could and how it should. And that's because this area is full of myths and misunderstandings. Actually, quite a few you've actually brought out, the myths and misunderstandings. The first myth in relation to this is data is safe where it's stored. Now, one of the best ways I've found in policy work in data to understand it is to take the word data out and put the word money in and see if it works the same way. Could you imagine if we decided that money was safe where it's stored? But of course, you all know money is just data. You're not actually sitting on huge vaults of cash. It is not stored anywhere, but we're going to apply a different standard to data. So in relation to making strategic decisions on this, I think it's important to realize the landscape is far more subtle and nuanced than is being presented to you in relation to this. Also, data use is different to data flow. Usually regulation is about the use of data, but data flow, data doesn't recognize any borders at all, and now we're trying to put legal borders on its recognition. That actually won't hold. The other thing that comes in here is this misconception that data can be owned. It can't be owned. It's not a thing. It is more like energy than anything else, and it is not a property thing. Lastly, the last misconception is that privacy is some kind of constraint. Privacy is actually inherent in the data flow that you're trying to use. To deny privacy is like trying to deny physics. Privacy is really, exactly as you said, it's, I want my data used in this way. All you can do is work with that. It is part of the fundamental nature of the data. So I think the business decision here is a distinction that you made in the introduction, which is a distinction around this is an information supply chain. Stop thinking only about the raw material. Stop thinking about uranium-238. It's got to be enriched into 235. And maybe you don't need the raw uranium yourself. Maybe you just need the energy that comes from it. A lot of restrictions on the use of data don't apply to the use of insights derived from that data. If you manufacture that data onshore into insights, the insights can flow. And a lot of businesses now recognize that the holding of that uranium, the holding of that raw data, is actually not a good thing. Like uranium, it can be quite dangerous if it gets out. So I think there needs to be a whole lot of subtlety here around what intermediaries are going to play in the information supply chain and where do they need to be located. Does there need to be the equivalent of a free trade zone somewhere so we can manufacture data into insight onshore to fit in with a regulatory system? And I don't think we as a group of people in the financial services industry, or we as a group of countries, are being sufficiently sophisticated to actually respond to the real question, which is how am I going to get information to where it provides productivity?
That's extremely helpful as a framework to think about it, and probably deciding where you sit in the value chain is one of the key decisions, probably looking into the future. But of course, as financial institutions, we have to make choices today and where we stand with our, let's say, current situation and the kind of data that we manage from our clients and how we deal with it. And actually, this leads to the question you were mentioning about data flows and how you can operate. And going back to the whole idea of being a global financial institution or having an operation across jurisdictions. And I wanted to ask Joe precisely on this. We've been talking for the last couple of days about data localization restrictions and how this is affecting. And from the FSB perspective, I'd like to know whether this adds to the existing work you've been doing on fragmentation and how this fits within the debate.
Absolutely. So this theme, the importance of sharing information, not just data, but information in general, supervisory data as well, across borders, features prominently in the report on market fragmentation that the FSB released earlier this week. And as you will have heard, or many of you will have heard yesterday, it's part of a wider issue about how we enhance cross-border communication and information sharing. We held a workshop in Basel with the FSB back in February to talk about some of these issues. And one strong message we heard there was around concerns with these obstacles to information sharing and the degree to which they can increase compliance costs that are associated with banks and other financial institutions' cross-border operations. And by the way, I think it's important for us as financial regulators to acknowledge, and I think some of the complications arise through how many of these obstacles stem from regulations that achieve policy objectives outside of financial stability. So outside of the sort of range of things that we at the Financial Stability Board are used to thinking about: AML, cybersecurity, data privacy laws, etc. And they're often not set by financial regulators. But they can affect financial stability because they increase the cost of banks' integrated operations. And they can combine, as you alluded to, with data localization rules to reduce the efficiency of business, opportunities for risk management, all the things that we are used to thinking about from the perspective of financial stability. And by the way, there's a cost here to the regulatory community as well, insofar as the obstacles to sharing of data across borders impair the quality of the data that we're getting from these new global data sets, things like trade repository data and things like that are supposed to help us in the task of guarding global financial stability. I should say that, and you see a flavor of this in the FSB report that was released earlier this week, this is an area in which the FSB has been quite active. You'll see in some work that we put out in November some of the thinking we've done around addressing or removing legal barriers to the full reporting of OTC derivatives trade repository data. You'll see in our report that there's an acknowledged need to ensure international cooperation between supervisors and regulators across borders. You see some signs of success there. IOSCO, for example, recently reached an agreement under which personal data can be transferred between supervisors within the European Union and those outside of it, within the confines or within the scope of the GDPR. And you see multilateral memorandums of understanding being drawn up that draw up guidelines and standards and minimum powers that securities regulators have to obtain and share information with their international counterparts.
Well, thank you so much, Joe. Actually, we've gone through a first round of analysis and discussion on how we're actually dealing with those restrictions and how we're looking at data as something that we need to control, we need to manage, and how regulators are mostly thinking about this issue. But when you talk to people in the technology space and the innovation space, they think about data differently. There is a lot of opportunity around data, and data policy needs to acknowledge this too. So now I would like to move into the next part of the conversation when I would like to ask you about how does data policy enable this kind of innovation. And I'd like to turn now to Scott and actually ask you what is motivating the surge of a global interest on data sharing and data sharing regimes, and particularly open banking, which is arguably a subset of these data sharing regimes.
It's a really good question. I help a few countries, and the most important, it's like good journalism, the most important question is why. It is not how or what. And I can already spot in different regimes that they started with the how and what, forgot the why, and we don't even know why we're doing this anymore. And the reason that's so important is it differs in each place, because data use is culture. And so you shouldn't expect that these are done for the same reasons in each place. And that's quite different to money. That's one of the real differences between data and money. So it can be done for payments as an offshoot from payments, sharing data in relation to payments. It can be done for competition. Importantly, it can be done for consumers, either because they need more control, because they're feeling anxious about decisions being made about them that they can't control, or in some countries, for financial inclusion for consumers, so people can get access to a system they can't otherwise access. In some countries, it's been done because it's a productive asset and we need to have a framework for its use that goes down to people, so people can choose. That point is really quite important, because in some of the frameworks and some of the places, it's because we actually do need a financial system for data. Now just dwell on that. A financial system for data, not data for the financial system. It's an integrated system that produces a framework that people can invest and innovate on. It's sort of like information theory sharing an edge with the principles of financial market infrastructure. And that's quite a fundamental thing. The last point, on the lowest level down in the foundation, is whether it's needed whether the reason is because financial institutions need to become more match fit in being able to compete in an information age. Because of what we've heard over the last day and a half, there is always a possibility that technology companies will compete with you, who are already technology companies, in your home field. And sometimes the policy is to make sure that everyone is match fit to compete fairly on that field.
One of the criticisms that these trends to opening more data has been done by the financial industry is that in many jurisdictions it was just creating this financial services for data, which I think is a great way to look at this, but this creates a asymmetry, let's say with other jurisdictions. I was surprised by how little support the last point of the poll we had before on data symmetry had from the audience, because I think this is a key competitive issue for the industry in the next few years. And actually, Australia is one of the few jurisdictions where by design, the whole idea of user data sharing has been done across sectors, and arguably this needs some implementation sector by sector. But you've been very involved in how Australia has been implementing the new consumer data right. Can you share how this is being implemented in Australia?
Yes, so the consumer data right is implementing 50 recommendations from my review for our government. And because the government appointed me a financial systems lawyer, we ended up with a financial system. But there's a fundamental part of that. I wasn't given instructions to move value from banks to everyone else. I was given instructions to create a resilient and robust system that creates a platform for innovation and competition in data, which means there has to be reciprocity. If you want to play in this game, you will pay. In other words, if you want to receive data from a customer, then you yourself must respond to a customer's request to pass data to another person in the system. That's only fair. Other things which are necessary is there's got to be a clear liability regime, so one group of people doesn't have to carry the can for everyone else. The liability should be yours if you made a mistake, and not if others have made a mistake. Importantly also, the Australian system, exactly as you said, is entirely driven by the customer. All the things come back to the customer's choices. It's like the customer can write a cheque. I'm sure there's people in this room who know what a cheque is. I've got to be careful about that. Write a cheque for data, the data that is already shared with your bank, in the same way you can write it with money. But fundamentally, it also applies to other sectors. We haven't even gone online with banking. That's going to happen in the next few months, but we're already consulting on the way it'll work for energy, and then telecommunications, and then retail, and then media, and then technology, and then social media. In other words, the policy is it applies to the entire economy, and it's not siloed. If you're accredited to receive banking data, you're also accredited to receive any other data which is not more sensitive than banking data, and at the moment we can only think of health as being more sensitive than banking data. So the idea is that this cannot be about disadvantaging one particular sector, because it is not about that sector. It is about the data sector. And quite frankly, banks have huge investments in data. From a productivity point of view, they should be able to leverage that into helping customers in other sectors as well. And also, a word that was used earlier, they should be able to leverage the trust they have developed over many, many years of keeping my stuff safe so that they can provide other services to me. They're not the only ones. There are lots of trusted entities in an economy, but banks should be able to compete on equal terms with them as long as it's all about benefiting the customer. That's why the Australian system is built that way.
We often forget that the user should be at the center of all of this. And sometimes people think about this, about reciprocity between firms, as if firms have the right underlying, where it should be the consumer who benefits in the end. And I wanted to turn to John. Actually, the Singapore Personal Data Protection Commission recently published a discussion paper where they were proposing a new data portability right, something similar to what we already have in Europe under GDPR. Now, my question would be, do you think this will actually help users have more control over their data? And in light of what we have just discussed, do you think there is some improvement to that proposal that could make things easier for both users and financial institutions?
I actually want to go back to what Scott mentioned earlier about the fact that I don't think today we have a clear framework around what exactly we're talking about in terms of data, in terms of, are we talking about, transactional data, we're talking about derived data, we're talking about, so I think, firstly, I think we needed to have some framework around that. And the reason for that, and which is kind of answer the question, I think that is the debate that's happening. I think it's not clear today when we talk about data portability and all that, what exactly we're talking about, what data are we going to be about portability. So I think we need to look at a more clearer framework around what is it we want to share, and how is it benefiting consumer, which is also discussed. And I think to some extent as well, we need to educate. We talked about that, and I was thinking consumer today fully appreciate some of these issues. So as I mentioned earlier, that if you ask many consumers today, is that if your financial data was to be breached, will you have a concern about that? And they will say yes. But if you ask them a different question, if we use this data to help you improve your life, and would that be a concern to you? And the answer would be no. So I think that's where the discussion needs to take place in terms of educating consumer and making them understand what is being done, as opposed to just talking about data. So I think we need to go back to basic, talking about what exactly we're talking about when we talk about data protection, data privacy, and so on, and then educate before we start talking about sharing. I think today we are sort of jumping into the sharing bit without answering some of these fundamental questions. And I think that's the debate that's happening in Singapore as well. I mean, it's pushed towards open banking, but the conversation we're having is what we really mean by open banking, as opposed to just open banking. So, yeah.
You need to figure out what this is all about and how you can make the benefits tangible for users. And actually, this is one of the reasons in our case at BBVA, we've been very active in discussing with authorities the need for cross-sector data sharing regimes. But the one question we always get asked is, what exactly do you plan to do with those services? How can you make those benefits tangible for your users? What kind of new products, new services? And the question that eventually financial authorities also care about is, how will these make you more resilient and increase the trust that consumers have on you?
Yeah. So as I said earlier, I think if we start looking at educating the consumers, say that, look, if we have this data, we'll be able to help you plan your retirement better, right? Would you allow us to share? And I'm sure they would if they feel the benefit. But it has to be bespoke, individualized. It cannot be saying we have a framework and everything is open. So we need to have that approach. And today we talk about sharing of this information without really clearly articulating what is it how it benefits the consumer. And I think different consumers will have different idea what the beneficial expectation will be, and therefore the bespokeness is to take place as well. Yeah.
Absolutely. Lara, I wanted to ask you about the risk side of opening access to data, because we've seen that there are benefits, that there's so much you can do potentially with access to data, but how will this affect the risk function? How will we deal with those risks associated?
Well, I mean, look, I think that opening up data has positive and negative effects on risk, right? So the big opportunity, and certainly something we have been very focused on at Credit Suisse, is just how we can use data to better risk manage. I mean, risk management is a huge synthesis machine, frankly, taking in information from outside the bank and inside the bank, information on our clients, information on our trading and markets activity, which is, again, why I would say that if it is overly regulated, you actually will impede the financial stability. And just maybe a side comment, and being a little provocative, the financial services industry, I think, is facing one of its biggest opportunities in terms of the influence of technology and its biggest threat competitively. So we should just be very careful to sort of begin to create another wave of regulation right at the point that, frankly, the industry has an opportunity to do what it does best, which is compete. So on the risk side, I think we have that same opportunity to be innovative, think about new ways to better understand risks. I think that helps banks, it helps regulators. it helps economies. The downside is, as we said earlier, if this becomes an overly complex network and framework of rules, requirements, and policies, I think you will, frankly, further bog down the companies that are still reeling from 10 years of significant regulation. And I would say regulators in the room would openly admit that they are currently assessing the last 10 years of regulation and what is really still required and perhaps what is no longer necessary in the same shape and form. So, it's both an opportunity and a threat, but I do hope that just as people, I think, have given the benefit of the doubt to some of the more larger technology companies, that we can unleash a bit of the natural innovation for the financial services sector.
Now that you mentioned that in big technology companies, there is a shortage of talent, and we often talk about technology and the opportunities around it, but we forget that we actually need people who know about it and who are able to implement it and make sense of all of this mess around data and technology. Do you think that the financial services industry is going to be able to actually attract the talent? Because we are competing for the same guys as the big techs, and if we have a hard time getting those people, imagine how the regulators will do it, because they definitely need also specialized profiles and people who are able to understand what we are doing in risk functions and in other key functions at a bank. How do you think we can play this?
Yeah, I mean, look, it's a great question, and I think from personal experience, I do believe we can attract the talent. It's not easy. Certainly large technology companies are very effective, but I think what's interesting and what I've seen in my previous role running compliance was large technology companies suffer from the same thing that large corporations suffer from, which is if you're a very highly skilled technologist, data scientist, sometimes life and the job's boring. These are big institutions, you don't get as much opportunity. And what we found we were able to offer was one mission. So in compliance, interestingly, we were able to attract people with the mission of finding the bad people and preventing the bad people from entering the firm. So I think in risk management, we shouldn't forget about the mission. And I think in financial services, there's a great mission. Banks are there to provide capital to lend in order for people to accomplish their goals in life. And I think people find that as a mission. So, one is mission. And I also think regulators have a mission at the core of what they do. So I'm optimistic. I think there's still a lot of work to be done in terms of ensuring that we can attract and retain that talent. It means we have to rethink, by the way, how we write up the types of job descriptions we need, how we promote people inside our organizations. These are not typically structures that enjoy being rewarded for managing hundreds and hundreds of people, but rather from the creative output that they can produce. That's not necessarily in the traditional DNA of how we would reward people in financial services. So I think there are adaptations, but at our core, certainly we've had great success in attracting really top talent in the field. And I'm sure regulators, it's difficult, but I think regulators have that same opportunity.
I think you're absolutely right, and the whole idea of explaining the mission and explaining that there is a lot of good that you can do working for a financial institution and managing risks is essential. And of course, the Financial Stability Board, Joe, also has this clear mission. It's extremely important. Everybody's aware of this. We've been dealing with the post-crisis for a long time now. But you're facing your own challenges in a world where, as we were speaking, we have technology and innovation happening on a cross-sectoral basis. It's very hard to define the limits of one sector and the other. You have, I don't know if competing, but sometimes there are even overlapping mandates from different authorities. How do you think this can be managed in the regulatory space? How do you think that we can get international agreements and cooperation in this space, particularly given that many of these technologies actually have cross-border span, and we can think of cloud and data protection going across borders. What's your view on this?
So I think the first thing I'd flag is that the news and indeed the track record over the last 10 years isn't all bad here in terms of fragmentation and the glass being half empty. some of the regulatory reforms that we've seen enacted over the last decade have come about as a result of an intense period of unprecedented international cooperation and a period that's seen regulators internationally overcome some of the boundaries that have traditionally existed to them speaking to each other. I think at one point about 7 years ago there were 150 working groups that existed in Basel and Madrid, and I found out yesterday that about a third of those were focused on issues connected to data. But as you say, the landscape's changing. There's a need to, as I said earlier, ensure that the coordination and sharing of data continues despite these potential obstacles. You mentioned cloud technology, and that's an issue that I think presents a particular set of challenges on which the FSB has done some recent work, and you'll find some of that in a report on cloud that we put out in February. There I'd flag a couple of things. One is around the issue of risk management by firms, particularly sort of operational failures and how those are managed. And then also the degree to which regulators, and in particular those charged with resolving financial institutions, are able to step in, if data is held in the cloud, to what degree can they get hold of it, particularly in the presence of data localization requirements where that data is held in a different jurisdiction. And there's a clear need to discuss the implications for financial stability there. The other thing I'd mention, I think, is that the regulatory community are very used to considering this trade-off and the issues around the trade-off between competition and the need to ensure competition and also maintain financial stability. And now there's a whole other trade-off, a whole other spectrum of regulation emerging and that exists between competition and also the free movement of data. And what I think we're seeing is different bits of regulation coming out in different places along that spectrum. You have GDPR, which is all about the rights to portability in some sense, and then in other jurisdictions, or in some jurisdictions at least, you see restrictions being put in place on social media platforms, for example, and the degree to which big technology companies can port data between their social media platform and some of their other commercial functions. A final thing I'd flagged, and you see some of this in reports on decentralized financial technology that the FSB released last night, is that resolving some of these issues and continuing to discuss some of these issues is going to require the engagement, and it's going to require the engagement with stakeholders that go beyond those that financial regulators are used to dealing with. So technologists, data scientists, cryptologists, people that are used to dealing with some of these issues, and people who aren't necessarily as used to speaking to financial regulators. So there's a challenge there in terms of how we continue the dialogue.
Actually, we're getting short of time, unfortunately, because this is a conversation that could take us hours. But I'd like to make a final question to all of you related to this last question I asked Joe. Because we've heard different proposals in the last few days, who should actually take the lead to ensure that there is consistent in data policies worldwide. If we're able to achieve a much needed consensus on basic principles around data, who should actually be taking the lead, given that this has a cross-border, cross-sectoral nature, and we've heard that there might be an option with the OECD, with the WTO, with the G20 providing a mandate, to task force. Do you have any views on who has the ability and the mandate to do this? Anyone want to comment on this?
I'll start so you guys have some time to think of a good answer. There's a few things I have learnt in the way that, for example, the open banking standards for Australia built on and for our own country improved the British standards. I expect that, for example, New Zealand, who will take our standards, will build on and improve those standards. I hope my country then improves its standards to match that improvement. I hope the United Kingdom would do the same. Why is that process important? Is because people don't like to be told by other countries what to do with data of their own people. But there can be consistency along the lines of how the data flows as opposed to how it's used. That all being said, there was a part of my review where I said that I need our systemic regulator, which is the Reserve Bank of Australia, to be involved, not because of banking, but because there are some systemic risks in data. We will end up with having too big to fail in data aggregators. We will end up playing through all the lessons we were supposed to have learned from the last 10 years. And so we do need that in as well. I would not recommend at the moment a particular global regulator to tell us all what to do, but I do think there should be some coordination, particularly around the points that you raised. What is actually the question before we set up the global data agency, which is probably going to terrify all of us?
I completely agree.
I was just going to make one comment to say that certainly it's not the financial regulator. But who, beyond that, I think that's a more difficult question.
Who, I don't know. I think the idea of a global data monolithic regulator, some would find a bit scary. So one thing I will say is the issue of how and when, and something that the FSB picked up in its report on market fragmentation, is the need to consider these sorts of issues and the obstacles to sharing information early on in the process of setting financial regulation.
Well, thank you so much. Unfortunately, we're out of time now, so I would like the audience to give a big round of applause to our panelists today. Thank you so much.
Thank you.